20146, that's your SMS line at Metropole TVKE across all your social media platforms. My name is REGINALD here again this morning. Let's talk about what was the biggest surprise last week. Whatever is left of the Finance Act 2018, which has now seen some of its laws abolished, as the 9 months the judges gave senators to ensure that the laws have the backing of the Senate expired, which has seen some 23 laws in the Act abolished. Now, the Finance Act of 2018 contained the bulk of taxes that are at risk of being nullified. While nullifying the Act, Justices Jairus Nga, Anthony Ndungu, and Teresia Madheka reiterated that one speaker could not unilaterally make a decision as to whether a bill does or does not concern counties. Now, the ruling read in part, and I quote, "A declaration be and is hereby issued that while the speakers of the House concur that a bill is one that concerns counties, the bill must be passed in accordance with the Articles 110 to 113, 122 and 123 of the Constitution and the standing orders of both Houses, and is not subject to Article 114 of the Constitution." Now, the petition was filed by the Senate and the Council of Governors over the said laws passed by the National Assembly on devolution without the Senate's input. All right, this morning, let's touch on those areas that really attack tax and tax regimes in the Finance Act of 2018. And this morning, to help us understand exactly what this means, therefore, in the current tax regime, we are joined by REGINALD KADZUTU, who's going to take us through this morning. REGINALD, good morning.
Morning.
I want to start from this area, really. Were you surprised that all of a sudden last week you got news that, well, we do not have some parts of the Finance Act of 2018?
The ruling was definitely something actually good for the country, because we can't cherry pick which parts of the Constitution we can decide to implement and which we'll decide to ignore.
Yes.
And I think it should be a good lesson to Parliament, that some of the laws that they pass and they try to bulldoze their way through have greater impact and effect, especially when such things start to happen. But it really business and people, especially when it touches on tax laws that were implemented as part of the Finance Act 2018, and there are quite a number. They touch from very wide areas of the economy, and at least the judges used wisdom and prudence to give 9 months before this ruling comes into effect. And the idea of the 9 months is for the Parliament and Senate to actually build consensus and iron out things that need to be ironed out on those bills.
Yes.
And also part of what they have put in there is that perspective. So even if they are nullified after 9 months, it will be going forward. So if you paid on something that is going to be nullified, it is unfortunate on your side. And these are some of the consequences that Parliament needs to see, that some of their lack of wisdom would have costed businesses that paid a lot of VAT, which most probably they were not supposed to pay. So I believe the Supreme Court did it in a professional and judicial manner to make sure that we do not create a mess. Because if it was going to be retrospective, then you're going to find yourself in a situation where KRA has to refund people. If you're a business that charged VAT on someone, you then have to refund that person that VAT. And we know that KRA and paying refunds is like trying to draw water from a rock. It's not going to happen. So we're going to get into a lot of financial mess. If you relied on a certain set of financials to make decisions, and some of the taxes are now have to be funded. The contingent liabilities that are going to come up in the next period are going to be humongous. So I think the wisdom from the judges there will help the situation, but does save the notice that your actions can have crippling effects to the economy.
Pretty much. Now, I want to ask you this morning, Reginald. I mean, if you look at the Finance Act 2018, it came from a backdrop of when Kenya was under immense pressure from even international lenders to see to the fact that they are actually meeting some of their obligations. I'm talking about repayments and all that. Would you say, therefore, that when some of these laws are expunged, that it's a win for KRA?
Not really a win for KRA, because you're going to remain paying for the 9 months.
Yes.
So KRA, nothing really changes. They will still enforce.
Yes.
If some of these tax changes are then changed, if some of them are dropped, so for example, I don't think the ones touching on common areas like unga, fuel, and whatever will really change.
Yes.
I think the ones that are touching on counties might be the ones that might have a back and forth, but I believe some of these things will still stay in place. So for care, if is actually going to be nullified, then it is a headache for them, not a win for them.
Yes.
Because they will be thinking of, we thought we had gotten 5-10 billion in revenue from this tax. This tax has been thrown away. Where are we going to get that 5-10 billion in the next coming year after July? So, for example, when KRA is planning their 2021-2022 financial year, or their targets that are going to be given by Treasury, it will be also a period of uncertainty for them. Because, for example, if all of them are nullified in the Finance Act 2018, and all the income that they were generating from there is gone, they now have to think of how do we cover the gap, because Treasury is not going to reduce their target. They've never reduced their target.
Yes.
Now we're in 2021, 2022. Your target is 2 years higher. But what your target was based on, you don't have any authority to collect those taxes anymore.
Yes.
So it's not a win for KRA. It will be a headache for KRA going forward, and a big headache for the Treasury.
Pretty much. Now, Reginald, let me ask you this question, because we're going to look into some of those direct areas that have been affected, if indeed that will be seen to. Now, is it possible that in some sort of way that this would happen intentionally? Because, I mean, Reginald, from where you and I sit this morning, it's not possible that we could assume generally that this was a mistake from the lawmakers in this country. Was it intentional to some extent? Would you read that into what we have this morning?
I don't think it's intentional. I think our lawmakers, the arrogance and the ego and the back and forth between the two houses, the lower house and the upper house,
yes,
have been playing out for a while.
Yes.
And the bravado that the lower house has been trying to, that they are more important than the upper house, the Senate, has played out now. And Senate have been able to use the courts effectively to get this properly and being given the right authority by the interpretation of the articles in the Constitution, that bills cannot go through without a discussion with the upper house. And that's, I think, the real contention was there. The Senate had to try and establish the authority, and going through the court process. Now the lower house knows that they cannot pass any law without the Senate. And that's what the Senate has been crying for all this time. So I don't think it was intentional. It is the sheer ignorance of the bravado from the lower house trying to prove they are more important than the upper house. And now it has caused us this mess that we are in.
Pretty much. All right, Reginald, let's therefore cross over to what now is the Tax Amendment Act of 2018. And this includes the 8% value-added tax that was introduced in September 2018 on petrol and diesel prices that had led to public anger and strikes. There was also a plan for tax on fuel that had been postponed since 2013 on the back of protests from industry players and consumers in the country. So now, Reginald, I want you to help us understand how do we understand this Tax Amendments Act of 2018 in relation to what is going on right now, especially in the energy sector. Will it affect the way in which the prices are right now? Yes, we apologize. We seem to have lost Reginald at that point. I beg that we take a short, tiny break, if we may, because we're actually looking at what the Tax Laws Amendments Act of 2018 is, and as I've mentioned, is that they include the 8% value-added tax, VAT, that was introduced in September 2018 on petrol and diesel prices that are led to public anger and strikes. So, Reginald, I don't know whether we have you back. Can you get me now?
Yes, I can hear you, Simba.
All right. Now, my question to you was, I mean, if you look at some of this, the Tax Laws Amendment Act of 2018, it has very, very strong areas that it was touching on. And I'll just show you what they are. They were talking about the value-added tax that was introduced in September 2018 on petrol and diesel prices. That's one. There's also another one that was introduced back also in 2013, which is also getting reflected again in that Finance Act of 2018. So the question is, what impact will this new ruling have on the general consumption of fuel in the economy after the energy regulator said that kerosene consumption had last year fallen to 15 million litres from 42 million litres? And is it going to affect it or not? Let's clear that as well.
I don't think it's going to affect the consumption of fuel, really.
Yes.
Because fuel is not really an elastic good. It's not like you're going to stop putting fuel in your car, or you're going to stop putting fuel in your generator, or whatever needs fuel to run will still need fuel. So it's more of an inelastic good. And when a good is inelastic, it means that it cannot be substituted that easily. And yes, we can substitute fuel, but we don't have the substitutes here in Kenya. What will it mean? There's a concept called dead weight loss in economics, where especially when it comes to taxation. Now,
Yes.
when I have to pay higher for fuel, that means my income for other areas of expenditure has reduced. So you now have ripple effect in the other areas of the economy. So you create what we call dead weight loss. So there is a loss in another industry caused because I have to spend more on an inelastic good to buy more fuel. And we know the ripple effects of fuel is that price of most things will increase. That again creates another huge ripple effect called of that dead weight loss again, because then I am paying more for electricity, I am paying more for manufactured goods that way they've used generators to manufacture those goods. So the prices of those goods go up. When the prices of the goods go up, that means I spend more on it, or I spend less on it. If I spend less on it, then that business does not make sense to continue running. Then we have ripple effects of people losing jobs and even companies closing down. So whether it will have an impact on consumption of fuel, no, it will not have an impact on consumption of fuel, but it will have ripple effects in other areas of the economy. Is it going to be removed? I don't think it's one of the things that will actually be touched. Because ideally it's not directly affecting counties. It's a national item that is there. And so I think especially on VAT, on fuel, will continue being there. Kerosene, yes, they're trying to price out people from using kerosene. They're trying to move people to use more of LPG,
Yes.
which also the price of LPG have started going up as well. Which now leaves the lower cadre of the country in a quagmire, because what they will do is revert back to charcoal and the environmental effects that have with that. So you find kerosene has substitutes. It has charcoal, there's wood, there's LPG. So you will most probably see movement towards those areas, and it will kill that kerosene area and it will kill the people that make kerosene lamps and moving forward like that. And that's why you find that the inflation of the lower income part of the country is higher than the inflation of the higher income, especially because of prices of energy.
Yes. Reginald, just before we move on to the next issue, this is a question that I got from some of our viewers last Friday when we teased that we're going to actually talk about this. And the concern was, if you look at exactly what we've done to VAT in the country in the wake of the coronavirus pandemic, where the economy is getting a reprieve from the current 16% to 14%, is it going to also touch on that? Will they be forced to roll it back because now the Finance Act of 2018 has also been affected as well?
I don't think that will happen, because all these measures are expiring in January anyway. All
Yes.
these repairs on VAT, corporate tax, PYE will
Yes.
be gone by January.
Yes.
So by the time the 9 months are reaching, you will have been back to the normal VAT regime in any case anyway. So I don't think it will affect that part of those COVID measures that have been put in place. We only have a month left, a month and a half left to enjoy those. So if you're a business or you're an individual, to try and figure out how much you can get or benefit from it. If it means bulk buying in December so that you can buy cheaper and store somewhere, if something that you can store, then makes sense. Yeah, so it's just trying to figure out how to take best of this 1.5 months. But by January, VAT will be back to its normal 16%. Corporate tax back to 30%. PAYE also back to the high 30%. Moving forward.
All right, let's look at another area again, Reginald, which we do know was also a very contentious tax that was introduced. Now, if you look at the taxes on mobile money transfer services like M-Pesa and other money transfer services fee, we jumped from 10% to 12%. Now, factor that saw firms like Safaricom increase their service charges as well in the country. Are we going to also now see a rollback of that?
Again, that's something that touches on national. It's not really specific to counties.
Yes.
So I don't see that being rolled back. That is definitely going to continue. If it was going to be rolled back, it would have been done pre-COVID. As they are trying to move people away from cash, it would have been a good incentive to scrap that VAT on mobile transaction charges, and they did not do that. So that is a statement of intent that they are not planning on actually do that. So I don't think that it's something that is going to be contentious between the lower and the upper house of Parliament. Even if I don't even think it's something that is going to be discussed in that discussion.
Yes.
So it will still be there even after the 9 months. I don't think it will be nullified.
Pretty much. All right, Reginald, as we clear this conversation, therefore, for you, what really stands out for you in the Finance Act of 2018, if indeed that is going to be rolled back as well on some of those 23 laws that are going to, might be, I would say, expunged from that act?
I think there are quite a number. There is goods that were zero rated.
Yes.
On VAT, which is unga, was
yes.
one of them. If that is rolled back, we're going to see the prices of maize go up. If they then roll back also in terms of mobile transactions on VAT, that the Mortgage Act is in there, compensatory taxation is there, transfer pricing is also there. So there are quite a number of things. There's also the Capital Markets Act that was also amended in that place. So I believe if they actually nullify all of them and roll them back, we're going to have an issue with asset pricing in the economy.
Yes.
How are we going to be valuing goods? What happens to people that bought based on the retrospective view that you priced in something that now does not exist anymore. So it's going to be a tricky issue in terms of how do you manage the situation. Being not retrospective is good. But the issue of asset pricing going forward becomes tricky. And the main thing that comes out of this is the uncertainty around taxation that always comes year in, year out, where we don't have a progressive tax policy where you can certainly go into business or investment knowing that these are the taxes the country have and this is how they operate, and not where we have every budget cycle the taxes are completely overhauled, changed, new things come into place, which creates uncertainty in terms of investment return, asset pricing, and even valuation of stocks listed on the Nairobi Stock Exchange for investment purposes. So I think Parliament needs to think beyond just the element of legislation, but look at the impact of the legislation that goes around. Treasury needs to look at the impact of taxation on the entire economy. I know we are in a mess because of debt, and they have to find ways of generating revenue. And we are clearly in a crisis where, as long as debt continues going up, you just know future taxation is going to go up, and the country will not grow. And I personally believe the Treasury needs to sit down and just press the reset button. How do we grow this economy, and how do we get out of this debt mess? And taxation is not the best route of doing that, because once you tax, you kill the economy, which ends up meaning that the revenue becomes lower and you have to go borrow more, and you find yourself in a debt trap that the Kenyan government finds itself in currently.
Pretty much. Reginald KADZUTU, thank you very much for joining us this morning on a business. Just to paint a clear picture on exactly what is left or what stands to be of the Finance Act 2018. Right, and that's exactly how we end our economic review this morning as well. Get involved 20146 as Metropole TVKE across all your social media platforms.